The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick off Wednesday trading in negative territory. We got Google and Tesla out with their numbers last night, both disappointing investors, trading a little bit lower this morning. And we're going to kick it off with those two equities to check it out because they are driving most of the action this morning. There is Google. You spike initially, but they do not hold, man. As they come in for the earnings call and you dive down to 175 for a low. We're at 183 last night. You're down about 6-7% for Google shares. You're trading right now at 176 for Google. You jump over to Tesla shares, and I believe this was the fourth quarter of disappointment for Tesla out there in terms of disappointing for numbers. You come into that number at 246. You're down $20 on Tesla on their numbers at 226.50. Even Elon says the story is about robo-taxis and robots. Paraphrasing. It's not about selling cars. If you believe the story, you can be a buyer of Tesla. But it is just that at this point, folks, a story. They pushed back the robo-taxis from August to October. Surprise, surprise. That August deadline was not going to be in tow, even though that's what propelled this equity a lot higher on some of this run that really began back there in June. When you escalated higher, you drive down to 138. They caught a bid the last earnings. You're at 246. You're trading right now at 225. So you get back. We'll go through some of the numbers. NASDAQ 100 right now. You're off by 1.5% with those two equities. Two of the Magnificent Seven, right? Two out of seven. Starting things off in negative territory. We get four of the equities coming out next week with their numbers. I believe we get Alphabet. We just got Alphabet Google. We get Amazon, Apple, Meta. One more. Maybe Microsoft next week? I'll have to look it up. Nonetheless, we get four big ones next week as the earnings season continues, but we got two of them, and they both disappointed. The NASDAQ 100 taking note as we are off by 1.5%. We're now below the lows of last week. On the NASDAQ 100, you got the S&Ps right now off by almost a full percent, trading off 52 points at 55.47. Dow right now off by 0.5%, 206 points in the red, and the Russell right now off by about 0.75%, trading off $17. Bitcoin. Got a little bit of volatility across the board, up by $900, 66,000 and change, not bad. Ethereum ETFs go live yesterday, just chopping around. Interesting, right? No real volatility on Ethereum. You got the ETFs going live yesterday, many of them out there to choose from, many of them waiving their fees in the get-go, and pretty low fees overall. Anyway, you're talking about, I looked at them yesterday, you're talking about 0.15%, 0.2% when those fees eventually do kick in. But nonetheless, Ethereum basically flat this morning. Crude. I was out getting gas yesterday. Now I get gas at Sam's, good old Walmart, man. $3.15, $3.15 in light of inflation and where everything else is. Pretty remarkable, the price of crude right now. Now that's about as cheap as you're going to get around here when you're paying for Sam's, you're paying for Walmart, you're paying for the membership, usually about 10 to 15 cents below on a gallon. The one thing I'll tell you, folks, if you're not a member of either Costco or Sam's, I think Sam's is like $30 a year if you get a discount. Maybe it rises up from there to $50 or $60 a year. If you just get gas at Sam's, you make up your membership fee. Let alone if you buy a few extra items there throughout the year. Maybe you just buy some paper towels, some toilet paper, some water, etc. You see why Walmart is dominating in the grocery sector, man. Sam's is happening every single, don't show up at Sam's on Sunday at like 3 o'clock because you can't even fight your way through the aisles in that store. And, Costco, I'm in Lakeland, Florida, a little bit outside of Tampa. They don't have a Costco out here. Otherwise, I'd probably be in Costco, right? But nonetheless, $3.15 for a gallon of gas, $77.72 for the price of a gallon barrel of crude right now. Gold catching a bid this morning, up by $14, $24.21. You see the bid off the recent lows a couple days ago on gold. Yeah, pretty remarkable run, $24.21. Now, keep in mind, $24.50 was when we hit this kind of upper boundary back in April. We hit that upper boundary again back in May. You got above that price level briefly at the middle of this month, a few days ago. on the 17th. What are we looking at? Yeah, we're looking at dailies here. You got above there on the 17th. What was the 17th? Last Wednesday? Yeah, a week ago. We were up there at 24.88. We're trading right now at 24.21 for the price of gold. And you jumped into notes and bonds. And what do we got? Higher highs and higher lows. Look at the trend, folks. Okay, yeah, we got a little bit of volatility. But since we bottomed out in April, you have higher highs and higher lows in price. And what is that correlating to? That is correlating to lower yields. And today you got it again. You got the 10-year right now up by about 6 ticks, call it 7 ticks to the positive at 111.02. The 10-year yield below 4.22%. We're sitting at 4.21% right now on the 10-year. The 30-year is up by 4 ticks at 119.05. You jump over to the dollar index, DXY, dollar backing off 104.21. That's helping out the gold contract a bit. A little bit of weakness in the dollar, off by 23 pennies at 104.21. And we're going to talk to our man Teddy Kegstad at 40 past the hour. Always a great conversation. We talk a little bit of Forex. We'll talk some commodities. We'll talk some dollar. Always a great conversation. Stay tuned for Teddy coming up at 40 past, as we do every Wednesday on the program. All right, so we jump back to Google shares. Quite a run, right? Quite a run we've had. And this is going to be a little bit of a reset. We're down to 175 right now on this chart. You can see that automatically we are back to where are we back to? Right where you were 3 months ago. Remarkable, right? The last earnings, where did we drive up to? We jumped to a high of 176.42, and that's basically where we're trading at right now. So Google wipes out 3 months of trading, just like that, right? We're going to be off almost $20. We're off almost 10% from where this equity was trading at just 2 weeks ago, just like that. Quite a haircut. Tesla, you take a look at it, we're trading about 225. Tesla, different story, man. You jump from their last earnings at 138. And the one thing I'll say is, even Elon says it, man, it's all about the story on Tesla. We go to Google. Drop as investors wait for AI to pay off. That could be the theme on almost everybody's day off, right? The industry's race for AI fuels cloud demand. The CIO says company looking for acquisition targets. Well, we know that. They were going after that cloud company for cybersecurity that fell through yesterday. And how about the capital expenditure? $13.2 billion in the second quarter. When are we going to reach the point when these companies are spending $1 billion a day on CapEx? Right? We're at $13 billion in 90 days. They thought they were only going to spend 12. $1 billion extra dollars in 90 days they spent. Whew. Remarkable. Supporting Google's AI programs and computing power needs. The race is on, man. Google once had a head start in the AI race because it developed much of the technology underpinning those popular chatbots. Now they are under pressure. Yeah, OpenAI, Microsoft, and the likes. Sales, $71.36 billion in the second quarter. Market was looking for 70.7. That's the reason why you saw a little bit of a pop. Income, 1.89 per share. The cloud, profit, 1.17 billion. More than the market was looking for. I mean, look at these numbers. Pretty dramatic numbers, right? They beat on sales. They beat on income, $1.89 versus $1.84. They beat on cloud computing profit, $1.17 billion versus $982 million was what they were looking for. But expectations are sky high, man. Sky high. Quarterly search advertising revenue, 48.5. They beat 47.6. The theme here is they didn't do enough, folks, because expectations were everything. We'll finish this up when we get back. We'll talk about Tesla. Stay tuned, folks. We'll be right back after the break. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Tigers, it's back. The annual July Tiger Dollar Sale. If you've been wanting to try one of our products, from our stellar newsletters to educative webinars, now is the time. From now until August 1st, we're offering a 20, 30, even a 40% bonus on Tiger Dollar purchases. After being applied to your account, your Tiger Dollars will be used for all purchases. They can be easily transferred, and they never expire. If you want to receive a 20, 30, or even a 40% bonus from purchasing Tiger Dollars, now is your chance. This is a perfect opportunity to try out a newsletter or save big on your current subscription. This deal is only available until August 1st. So lock in your bonuses fast. Go to TFNN.com today to lock in your bonus. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's off 51. We got the NASDAQ 100 off about 1.4%. So as we were talking about, we went through Google. Pretty strong numbers, right, on Alphabet across, G-O-O-G. Pretty strong numbers on Google, Alphabet across the board there, and they're still trading off about $8. Now, the one thing that they did miss, just to go back before we jump into Tesla, is YouTube revenue, slightly lower than the market was looking for. $8.66 billion in revenue. Market was looking for $8.95. Of Alphabet's various businesses, YouTube has been the most vulnerable to swings in the digital ad market, is how they put it there. Okay, but everything else was a beat when you look at it. And the expectations were sky high. They were looking for more. I mean, cloud profit above what they were looking for. Sales, 71.36 versus 70.7, right? Earnings, $1.89 versus $1.84 over there. I guess capital expenditure, right? Spending $1 billion more than the market was looking for at 13.2 versus 12.2. Not ideal, but they still beat on earnings when you're spending that much more money in the quarter as well. But YouTube disappoints a bit. Advertising maybe disappointing a bit and just not living up to the run that it's had. Now, Tesla, different story, man. So, Tesla, they committed earnings of, where's the number here? Let me scroll up. There it is, 52 cents a share, okay, in the 3 months ended June. That misses estimates for the fourth consecutive quarter. They pushed back the event showcasing robotaxi prototypes by about 2 months to October. It should say as of now, at least October. Okay, Bloomberg had already reported that. It becomes official on the earnings event that they're pushing back the robotaxis until October. Folks, I'll tell you, I've seen the videos. Have you seen the videos out there? There is no way I'm getting in a Tesla robotaxi anytime soon. Eventually, yeah. Eventually I will. Okay? But not yet, man. Not yet. I mean, maybe if you're talking about, a Waymo car that's going on a side street that isn't doing more than 15 miles an hour or something like that. But the other problem with this is the brand, okay? And Elon's continual overpromise, underdeliver. People are going to need to trust cars that they get into with self-drivers. And I don't trust Elon because he overpromises and underdelivers. Nothing to do with politics. Keep the two things separate, okay? There is a continued overpromise, underdeliver, and this is going to be a generational transformation when we start jumping into robotaxis, okay? And they're not going to be the only game in town. They're already not the only game in town. Alphabet mentions Waymo down here, and you want to talk about a glimpse of their competitors and what they're actually doing, okay? Alphabet's other bets, a collection of moonshot units that includes life sciences business Verily and the self-driving car effort Waymo, brought in $365 million in revenue and losses of $1.13 billion. They're going to have competition when this eventually does become mainstream, okay? And it will become mainstream. But I've gone down the YouTube rabbit hole. I don't know if anybody else has, man, on YouTube. Some of the performances of Teslas at this point are nowhere near where they need to be to have complete autonomous control of driving vehicles, especially when you start talking about going on highways, high speed, etc., all that stuff, man. So be careful. So the robotaxis, October 10th is the date they have as of now. More affordable models that could juice sales won't go into production until the first half of next year at the earliest. That's what everything should say in this article, okay? Because that's the real truth of everything out here. They keep getting pushed back. A planned factory in Mexico is on pause until after the presidential election in November, and a humanoid robot that Musk predicts will send Tesla's valuation soaring won't start selling until sometime 2026, at least. Folks, the humanoid robot is at least 2 years out. No one's jumping into a robotaxi in October, okay? Nobody. God bless you if you are. It's one thing trusting the stock. I would not be trusting robotaxis and being in that beta rollout of robotaxis because they have issues. I mean, you just got to look at the performance of the robotaxis right now. If they're that close, then they should be able to have the software in vehicles with people already in them. And all I see, and listen, people are posting them because they're tantalizing, right? The video is online. But be careful. They got a long way to go. This story is all about the future right now. Profit slumped for a third quarter in a row. Revenue beating expectations to $25.5 billion. A big chunk of that, $890 million in regulatory credits. How about that, man? To car makers needing Tesla's help to meet emissions. Pretty remarkable. They're doing almost $1 billion in regulatory credits to other car makers, right? Automotive gross margin under 15%. Yeah, they were at 16.4 in the first 3 months. The drop reflects falling vehicle sales and pricing. How about $583 million in employee termination expenses? Yeah, they were cutting a lot of employees. That was a big part of it in the beginning of the year. A couple analysts out here are pushing back even on 2026 as the number. The company will also make both robotaxi, which one analyst expects no sooner than 26 or 27, and the Optimus robot in Texas out there. And, yeah, it's all a story. And, yes, maybe that story will come in, okay? Gene Munster, managing partner at Deepwater Asset Management, one analyst, okay, anecdotal nonetheless, but check it out. The whole story here is about what else is to come. That's all they're talking about. What else is to come? Not what is going on right now. You might as well be a pre-revenue growth company that's telling a story of what's to come in a year or two, and that pre-revenue growth company is valued at oh, come on. Oh, that's Google, excuse me. I mean, yeah, there's obviously promise for this industry and for Tesla, but you're valued at $723 billion, and the whole story is what's to come. So be careful on that one. This equity just doubled in price, and you're going to open today down $20. Nothing saying this thing can't come back down and test at least $200, and you're trading right now at $225. Tough numbers, disappointing for the fourth quarter in a row for Tesla. It's going to be a wild one on the open. We get the S&P down 53 points. NASDAQ 100 off 291, off by 1.5%. Google shares right now trading down about $8 to 175. We'll check out some of the other companies. Yeah, look at Meta. Advertising on YouTube paying the price, right? What happens? Meta shares are down as well. We'll take a look at how those earnings are reverberating through the tech industry. Go.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets in negative territory, and it is going to be an interesting one digesting as we kick off the earnings season for the tech stocks, and we got Google on the opening bell. Ooh, yeah, not catching a bid on the open. You actually dip lower. We're off by more than 5% right now. And again, this should be the biggest wake up of all. That was not a disaster earnings from Google, man. Not a disaster at all. You see the spike higher initially, Earnings call, not what the market wanted, man. You trade lower, 174.62 on Google, off by 5%. Tesla, no surprise there, in my opinion, man, as they're off by 9%, $22 in the red. They disappoint for the fourth or fifth quarter in a row. And it is pretty dicey when you're talking about $750 billion company right now, all on the promise of future developments and nothing based on current revenue, current products, current growth, etc. They are a shrinking company in the car business, promising that they have products coming down the line that will save that company at $750 billion. I mean, Elon's quite a salesman, man. And if you believe in him and you believe in the future, maybe you hold. But right now, you're off by almost 10%. And you're trading lower as well. And we got the NASDAQ 100 right now, off by 1.4. We jump around to some of those other companies. So Meta, what did we see? We saw that YouTube was one of the only disappointing factors in the Google Alphabet numbers, and that's going to drive Meta down because all they are is basically an advertising company from Meta. They're off by 3.1%. I wonder if maybe the CapEx, Google is spending more money on CapEx than maybe the market thought. Maybe Meta is going to be spending a little bit more than the market anticipated. Definitely advertising, one of the showcases. If YouTube disappointed on advertising numbers, the same people spending money on YouTube are probably spending money on Facebook, Instagram, the likes. And so, yeah, Meta's off by 3% today. We jump off to Microsoft shares, down about 0.8%. Amazon caught quite a bit yesterday. They're giving back almost all of that, off by 1.4%. For Amazon shares this morning, we jump over to Apple shares, off by about 0.25%, off by 60 pennies at 224. All right. What else we got? We got AT&T out with their numbers. $18.90 up from 18. Nice little pop there, up by 4% for AT&T. We jump over to their numbers. Beat estimates for subscriber additions on demand for higher-priced plans. Interesting, right? The higher-priced plans. They added almost 500,000 monthly bill-paying wireless phone subscribers compared to 284. They add 419,000 subscribers. The unlimited plans that are usually priced lower than those of rivals have helped the company add budget-conscious customers amid tough competition from T-Mobile and Verizon out there. Free cash flow rose to $4.6 billion. Market was only looking for $4.22. Always a good number when you think about, where this company is, the potential. Free cash flow, big number for them, talking about almost $5 billion right now. Mobility equipment revenue down 8%. Total revenue, $29.8 billion, barely misses the number from 29.2. But for that company, it's all about this number. How many monthly bill-paying wireless phone subscribers did you add? And that's quite a beat. 419 versus 284 was the market expectation. And you got Verizon trading higher on that. Not Verizon. Let's check out where Verizon actually is. So AT&T trades higher. You got Verizon trading higher on the heels of that, up by about 1% for Verizon after they disappointed on their numbers on Monday. And you jump over to T-Mobile. And T-Mobile basically flat, down about 0.2% for T-Mobile right now. All right, we jump over to some of the airlines. They're talking about Delta in the Tiger's Den. Yeah, it's been quite a pullback, man. Delta very much impacted from the woes of CrowdStrike and the Microsoft problems of last week. But they're pairing some of those losses, but on a longer-term basis. Look at this pullback, man. They just lost $10 from where you were trading in May. That's like almost a 20% hit from where you were. You back it up a little bit longer term. And, yeah, you're back to kind of this area that you had, an area of resistance. In 2022, $45 was the number. You're sitting right now at $43, and we back it up to a monthly. Pretty remarkable that Delta, you're talking about trading right where we were 10 years ago. The airlines, man. Be careful with those airlines. Imagine that. 10 years ago. You hold Delta for 10 years, you're breaking even. That's a wild one. We jump around to some of the other airlines briefly. United, down about 0.8% right now. American Airlines basically flat. Southwest getting saved by their archaic systems. Yeah, and look at these tech stocks, man. Be careful. Down by 1.75%, 1.75% now in the red for the NASDAQ 100. And as our man Basil Chapman says, the day is young, and we are diving lower on the opening bell right now. Watch out. All right, we jump over to yields. 10-year sitting at about 4.22%. The 10-year up by 6 ticks right now. And let's talk a little bit of yields. Mortgage demand drops. Not surprising, man. If you're really in the market and everybody's saying the rate cuts are coming. If you have the potential to hold off, maybe you do, right? If you've held off this long and the rate cuts are pretty much, I don't want to say priced in, okay, but they are priced in. And nothing's for sure, but they are priced in. Now, we got the PCE, the Fed's preferred inflation gauge, Friday morning at 8:30. Pay attention to that one, of course, okay? What do we got going on here? Al, I'm watching Tiger TV, pal, and I'm getting a weird screen on the front page. There we go. Thank you. Come on. You got my chart in there? Yeah, you should. Okay, they'll figure it out. Mortgage demand. This is going to be quite a story to see how it plays out in terms of the average contract rate. Decreased to 6.82% from 6.87%. Applications for a mortgage to purchase a home still dropped another 4% last week. You know, percentage numbers on these small numbers are not something to get swayed by. Applications to refinance, basically flat, up just 0.3% right now. We're dealing with a number that's very much near 7% right now on the mortgage front. As long as that's the case, you're not going to see a huge shift, right? It's going to be driven by housing prices. Housing prices are driven by mortgage rates. We see that number come down to 6 or 5.5%. That is a whole different game. Whole different game when you think about it in that aspect. But we're not there yet. And if we get there, how strong is the economy going to be? That's the next part, right? If the Fed needs to cut 4 to 6 times, as then if they need to cut a full point to 1.5%, that would be 6 separate cuts that they would have to come in with. Where is the economy if that's actually happening? I mean, pretty decent Google numbers overall. Not exactly indicative of a dramatically weakening economy, but I would say it's more indicative of the market being priced for perfection right now and not getting the beat that they were looking for. As in, you got a beat across the board, did not get a beat on YouTube, so that's one of them, okay? Advertising revenue, maybe companies are pulling back right now. Maybe that's what we're paying attention to. But just like that, Google gives back 3 months of gains as you're right back to where we were on their earnings 3 months ago, almost to the penny. 176.42 was the spike high on their last earnings. We're trading right now at 174, actually $2 below that price level. Let's see how Tesla's trading on their numbers. Off by about 10% this morning. We jump back to AT&T. They catch a bid on beating on subscribers. AT&T shares up by about 3.5% this morning. Meta taking it on the chin as advertising revenue. Meta shares off by about 3%. 474 from Meta shares. And as a teaser to our man Teddy Kegstad, how about that? Our man Teddy, don't go away, folks.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the NASDAQ 100 off by 1.9%. You got the Russell in positive territory. Quite the divergence, quite the rotation they're talking about in the den, probably rightfully so. You're seeing it in action. Some of those tech stocks disappointing. But we're going to talk some Forex. We're going to talk some commodities as we do every Wednesday at 40 past the hour. Folks, come on over to the front page of TFNN. Under the newsletter tab, you can see Teddy Cakestat's Tiger Forex Report. He's got new issues every week. Updates throughout the week when warranted. You can check that out for $97. Comes with a 30-day money-back guarantee. We got some action in commodities today, and currencies, excuse me. And don't forget, he's got some awesome webinars out there. He's got Capitalizing on Time with Calendar Stock Option Spreads with Teddy Cakerstat, and Japanese Candlestick Pattern Stock and Option Strategies with our man Teddy. Go over there, check out the Tiger Dollar sale. Use those Tiger Dollars to sign up for some newsletters, maybe some webinars in the process. And yeah, we got some action in this market. Good morning, Teddy.
Good morning, Tommy. Yes, we do.
So we got a few different areas we could touch on. How about the dollar yen? Can we kick it off there? I know it's not the driving force in all the markets, but we got some movement today, man. Really pulling back from some of those price levels. Caught my eye this morning, and I just wanted to get your take. I know we got a bunch of gold bugs, of course, in the den, and that dollar yen, important to the dollar index, important to gold, of course, but it's quite a move. I got it up on the daily, man. Quite a break from where we were, almost 162 at one point. We're now trading at 153 in that dollar yen. What do you think about the action, man?
I think that's one of the biggest extremes you have, this moving the dollar right now. You have not as much volatility in the euro or the pound. If you look at the range and where we're trading at, I mean, yesterday we were trading above 156, and now we're at 150, just under 153 half, 153.40 or 60 rather. It's quite a move over the past couple of days without any real economic reasons or numbers to go by. I would say that crude may have some of the influence that's going on with it. Not that much, but I think it does have some bearing on it. The dollar, it has, it is in a corrective mode right now. So we had a nice rally, and I think now what you're seeing is because you have the extremes going on in the currencies, like you have more volatility in the yen and the Aussie and the New Zealand dollar than you do in more of the major pairs like the euro and the pound. The Swiss is also unwinding as well, and I think that's where you're getting a lot of this dollar weakness in these currencies, because those are the ones that haven't been really stretching very much. And so as far as the range, they have the biggest move. Like if you look at the euro, what it's done in the past week and a half from high to low to the bounce off today's low, its volatility, you're looking at 115 pips. That's $1.15. If you go and look at the yen now, over the past, go back just even to a week and a half ago, you're up at 158, almost 159. Now we're at 153. That's a big move, and I think that it's key that the lows that we've been prodding on, we're heading right above where I have a critical short-term correction band. Remember that this market is in a bull trend. We've been riding the highs, so I think this is more of an exacerbated profit-taking move, and I think it's very sensitive to bouncing very fast, like a balloon underwater kind of rally. Like markets directly don't always have direct reflections, but if you look at how the markets tend to go in like they or go out like they come in. This market's coming in very steeply. So if we were to have an extreme bounce in crude or a big uptick in yields, I could see that you could see the yen rally $4 or $5 over the course of a day or two. So I'd be careful selling it in the hole where it's at right now. If you're short, I'd be looking to take profits, maybe even a little bit lower, maybe keep your stops a little tight over maybe the high of the 2 sessions ago on Monday, and then work it down from there and see if you can maybe get it down to 152 even. I would be very cautious, though, at that 152 even level. If we get below it, 150 even has been that Bank of Japan threshold level. They would love to see the U.S. dollar yen below that. I don't see it happening, though, as far as any of the other, fundamental and technical factors. So, yeah, I think this is a great market to kick off the talk today, without a doubt. But it's very bearish pressure is there. It's obvious on the charts, but we're coming into a very strong support band where we could see a grind of a trade. We could basically drop another buck and a half, and then trade in a $1 to $2 range for a week or so, before we figure out whether it goes up or down, And I think that crude is definitely helping it. But like I said, if that gets a nice uptick of $3-4, and then especially if yields, get an uptick, then I'd say be very careful with being short the U.S. dollar yen.
Great takes, man. I appreciate it. And yeah, it was pretty remarkable. As you were talking about it, I was looking at that dollar yen, of course. I was looking at it on the short term, the move it's had the last couple of days. I took it a look at it on the daily. And then it is remarkable how that 150 area, you put this back on going back a couple years. We had the high, of course, late in 2022, basically touched 150 on the dot. You had the high of late 2023, touched 150 on the dot, and then kaboom, we get up to 162. Pretty stratospheric levels, and it will be interesting to see what happens if we come back down to that kind of area. As you mentioned, Bank of Japan, they'd like that area to be the threshold. We got pretty far above it. We'll see how it reacts as we come back down to that kind of critical area. Pretty interesting. What else did we look at? You touched on a few of those different. What do you think? I guess, we have a Fed meeting coming a week from today. Rates, of course, all in focus. September is in focus. We get the Fed's preferred inflation gauge coming on Friday. How are you looking at this market through the lens of where the Fed may be? You've given us some great takes in prior appearances on this program, but the Fed seems to be in focus, and boy, the market has shifted yet again, with the current theme being that rates are coming, and they're coming at a ferocious pace, it seems like. What's your take on that?
Sure, that's a great question. I would say, as far as how you're going to trade the next week going into that Fed meeting, we have a number that's coming out today in a couple minutes, the S&P Global Flash, whatever. I don't think that's going to really do anything. Tomorrow we have jobless claims. That's it for the rest of the week for us. There's no real major numbers coming out until next week on the 29th, which is the German retail sales, and also the Japanese unemployment rate. Those are marginal numbers in front of the Fed number. Probably not going to do much. I think until we get to jobless claims after the Fed, we're not going to see any fundamental numbers acting on the markets. Okay, so that means I would expect that you're probably going to see a drying up of the currency and interest rate trade from Friday, probably around 9 o'clock in the morning Central Standard Time, going all the way into the meeting on Wednesday. I would expect maybe some volatility on Monday morning briefly. We'll probably start overnight in the currencies. If they get a move, then maybe we'll see some action in the very beginning of the morning. And once again, I would say that every day around 9, 10 o'clock Central Standard Time on Monday, Tuesday, Wednesday, I'd be very cautious trading from that till the rest of the afternoon, because you're probably not going to get any follow through on any moves. And not unless there's some big shakeup that's newsworthy, and it's not going to come from any fundamentals coming out of the economics of the economy. That's not going to come. So unless there's some global shift, like if all of a sudden there's peace in the Middle East or in the Ukraine, which I really don't think is going to happen.
Right, I know.
That would cause some volatility, I'm sure. But it's I would say be very cautious moving into the number. And as far as what they're going to do, I don't think they're going to touch rates, just because we've had some of the numbers are like there's over the past 2 months are saying, oh, this is great, and we're showing inflation is slowing, but year over year those numbers are actually worse. They're looking at a month over month, 1 month in a row. So just keep that in mind.
We live in interesting times, as they say.
Yep.
Teddy, I appreciate it, man. Great information as usual. We look forward to talking to you next Wednesday.
Sounds good, Tommy. Take care.
Have a great one. Folks, stay tuned. We'll be right back. Finish up the show.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com. Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And this market is not finding a bid right now. We got the S&Ps off by 1.2%. They were talking about the den, maybe a 500-point day down, and boy, we are on our way. In the NASDAQ 100, we're off by almost 2% now. You're off by 387 points, 1.94% in the red. Dow off by 0.7%, and the Russell, I mean, look at that give up, man. You had a little bit of a rotation, and just like that, the Russell gives up 30 points from where you were trading at 15 minutes ago. That is a gigantic move on a percentage basis on an index trading at 2,200, where you dive 30 points lower. They're selling everything right now in this market. They're not selling Bitcoin, though. Bitcoin up by $1,000 right now. We got gold up by $15 right now. You jump over to some of the equities driving the action. Google shares, they actually saved themselves, off by 3.4%, but you were lower. Tesla shares, not saving themselves. Yeah, be careful on Tesla, man. Okay? You want volatility? Tesla's got it. All right? But don't forget how quickly this thing traded from exactly where you were, 265 to 138. How long did it take? What, 3.5 months? Yeah, from the beginning of the year, 4.5 months. 3.5 months? Yeah, something like that. 3.5 months. All right? And we just wiped out, 20% from where this thing was trading at 2 weeks ago? Be careful on that one, folks, all right? I've said it enough. You got S&P's off by 70 points. We got a request in the den. Disney. Yeah, this thing, man. You talk about a dog right now. You know, you had Comcast come out with their numbers early in the week. Park's disappointing. That's bringing down Disney shares. You take a look at the weekly. You got the low of $78 out there last year. You were at a high of $123 earlier in the year. You're $33 off that price level. What I will say is you got Deadpool and Wolverine coming out this Friday. That looks to be a big one. You got some big movies down the line coming out in 2026. But boy, if you're trading this thing short term, that is not a strong market, and that is putting it lightly, folks. Last in earnings, they disappoint. And yeah, they're disappointing yet again. You're down by 1% with the market right now at Disney at $90 on the dot. Maybe they got to pop on Friday, but they got some work to do on Disney shares for sure. Stay tuned, folks. We got Basil coming up next. He did an outstanding webinar last night. You can still sign up for the opening call on the front page. And don't forget about Tiger Dollars, folks. Check it out. Stay tuned for